What's good, man? I'm back. Motor Chart guy here, founder of Unbroken Mindset. And I just wanted to drop a little helpful little video on you guys, man, about advanced trading patterns. So with that being said, please make sure that you like and subscribe and join the Unbroken Mindset family. We have a free Telegram for crypto and options. You can definitely join our Discord. We got a 7-day free trial. So, hey, let's get to it. All right, what's good, guys, man? I'm here, man. I just wanted to drop some information on you guys that I think could be helpful for you new traders out there and somebody that's even looking to advance their techniques when it comes to technical analysis. So I'm going to share my screen here in a minute, and these are some of the advanced patterns that I like, and I'm just going to throw a couple of them at you on this video that I like to trade because they're kind of easy to spot, and I've trained my eyes to spot them. So, hey, let's get started. All right, so first shape that I like is called the cup and handle, and the cup and handle is a bullish pattern. So if you see here, a cup and handle price pattern on the security price chart is a technical indicator that resembles a cup with a handle where the cup is the shape of a U and the handle has a slight downward drift. So the cup and the handle is considered a bullish signal, right? So when you see this pattern here, and then you get that slight pullback, recognize that is a bullish reversal pattern. That is a cup and handle, right? Next one that I like. Head and shoulders. This is one of my favorite ones. It's pretty easy to spot once you get your eyes used to it. So this is a head and shoulders, and you'll always see a left shoulder, a head, and then another right shoulder, right? So this is um, a bearish reversal pattern. So this is showing you that you're going from a bullish to a bearish trend. So head and shoulders, definitely. This is definitely a good pattern. And what I'm going to do, guys, when I get to the end of this, I'm going to show you some charts to where you can, spot them because they're not always this clear, right? So let's go to the next one. Inverse head and shoulders. This is a bullish reversal pattern. So this pattern here is showing you that the bearish move is coming to an end, and we are kind of looking for a bullish pattern. So you have your left shoulder here, your right shoulder here, and then when it gets back to that neckline, breakout, then you enter the trade. You know what I mean? So this is definitely one that you have. Inverse head and shoulders, also called uh, a head and shoulders bottom, is similar to the standard head and shoulders pattern, but inverted. So this is one that is a very helpful tool to use when it comes to trading, you guys. So this is inverse head and shoulders. Next up, I have the ascending triangle, and this is generally considered to be a continuation pattern, meaning that the pattern is significant, and if it occurs within an uptrend or downtrend, once the breakout from the triangle occurs, traders tend to aggressively buy or sell the asset. So when you have this trading pattern here, this ascending triangle, once it breaks out, now you're entering in on that bullish, that call move, right? And sometimes if you get it to where it bounces off the top of this ascending triangle and then breaks out to the bottom, then at that point you're entering into a bearish move because that uptrend is coming to an end and it has broken to out of the ascending triangle. So ascending triangle shows strength to the upside. And that last but not least, at least for this video, descending triangle. A descending triangle is a bearish chart pattern used in technical analysis that is created by drawing one trend line that connects a series of lower highs and a second horizontal trend line that connects a series of lows. So same thing for descending triangle you get for the ascending triangle, right? but it's reversed. So as you see the triangle building up steam on the downtrend, if it breaks out, you already know you can hop in and continue on that bearish move. But if it decides to respect that support and then breaks to the upside, you know that that downtrend is coming to an end, and it's good for you guys to start looking for calls, right? So one thing that you want to recognize about these trading patterns, and I just showed you 5, there's a couple of more out there, but one thing that you want to know about trading patterns is just because you see that pattern, it doesn't mean, oh, I got to sit in a triangle. I'm gonna just jump in. Oh, I have a head and an inverted head and shoulders. I'm just gonna jump in and go on a call. No, you don't do that because you always have to confirm. So even though you see this inverted head and shoulders, it could respect this neckline as resistance and continue down. So you always wait for the confirmation to break out of the neckline, and then you enter into your trade. Same thing goes with the head and shoulders, right? Hey, we know this is a bearish reversal pattern, but it could respect this support and continue to go back up. So you always confirm on the candle breaking through the neckline and then entering in on a bearish move. So same thing with the head and shoulders. I mean, excuse me, with the cup and handle. When you see the handle coming up and you see the pullback from the handle, hey, let's make sure that this candle bounces off of this trend line before we enter in on the call. Or we wait till the candle breaks the resistance and then enter in on the call. Because guess what? This cup, when it's formed and they form the handle, it can pull back and it can keep going. So you enter in too early on a call and it breaks through and continues on a bearish move. So always make sure that you confirm with a break of resistance or a break of support. And that's why you will always hear me say support and resistance is the foundation of all trading. Because at the end of the day, resistance and support matters the most. So even though you spot the shape, guess what? It still has to break resistance to continue bullish or break support to continue bearish. Now, they're not always this clear cut. So what I'm going to do is I'm going to show you some charts. And up first here, Tesla. This is on the day candle. And guess what we have here? Inverted head and shoulders. You got the shoulder here, you got the head, and you got the shoulder. So right now, this is your neckline. So you want to see it get above that 1129 and then boom, excuse me, your net line is here, 1048. You want to see it here get above that. Once you confirm that it has broke that neckline, which you can see you have resistance sitting right there. Once it breaks that, then you know, hey, I can enter in on this bullish move. But guess what? If it decides to continue to go down and it breaks support, you know that it's still going to go down. So if it breaks support, now you know, hey, bearish move. So you always confirm with the break of resistance or the break of support. All right, next up we have UAL here, United Airlines. All right. Drop here to the hour real quick. Now, United Airlines, you have a head and shoulders right here on the hour. Boom. Now, we are expecting a bearish move, but guess what? We're going to draw our old handy dandy support and resistance and confirm. So that's the neckline, support, and this is our resistance right here. So if it breaks back up, bing, we're entering in on a bullish call. But if it does indeed break the neckline and continues to go down, hey, we're expecting a bearish move. We put in the put call, right? All right, head and shoulders. Let's go to KSS. Go down here to the hour. Guess what we have here? A cup and handle right here on the hour. Now, once again, always confirm with resistance support. Now, what we're looking for is we got the pull back here. Now we're looking for the break back to the top side. But it could, guess what? Break to the downside and break support and continue down. So you always confirm, once again, always confirm with support and resistance. Cup, now forming handle. All right, it's cup and handle. Here we are on Apple. Here's what we have. Ascending triangle. Ascending triangle. So you draw your trend line collecting to the lower lows. Right? Ascending triangle. So now we're looking for a break below, which you can see is kind of broken below here. Let's adjust that. As you can see, it's broken the low, or it's respected that trend. So now we're looking for the top side move. So once it breaks back up, hey, we enter in on the break of this high and we ride it to the top of this resistance line, right? Because this is our support, this is our resistance. And if it breaks out of this resistance, we know that we're going to get a continued bullish move. But if it does not respect this support and breaks through, we know that this nice uptrend here that we have on the day is kind of coming to the end, and we're now looking for the bearish move, right? Right. That's ascending triangle right here. Let's go to CAT. It's one of my favorite stocks to trade. Now, CAT has definitely been beat up for a couple of weeks. So guess what we have here? Descending triangle. Descending triangle. And you always want to put those trend lines on the higher highs and on the lower lows. So the swing highs and the lower lows, right? So right here, same thing. If it breaks support, we know we're going down. But if it bounces here and goes 2 up, guess what? And then breaks out of the trend line, which is this is playing as support, we know that we're going up. So you guys, like I said, you always want to confirm with the break of resistance or a break of support before you get into these. And one thing I also want to tell you guys, when you're looking at these shapes, if you have to squint your eyes at that shape, then it's not there. Do not make a shape be there that's not there. That's one of the things that you can do because you're trying to overanalyze and you get caught overanalyzing stocks is you think that's a head and shoulders or you think it's an inverted head and shoulders and you overanalyze what it is that you're looking at. So one thing, you know, you have to do is when you get into this, hey, make sure that you guys practice. Make sure that you study these patterns because remember, you deserve nothing, but you earn everything. So you're not just going to be able to spot these patterns at the wild, like just right off the bat. It's going to take you a little time to spot these patterns. It's going to take you missing a pattern or missing a move to see the pattern. So once you do that, you know, you put in your trading journal where you missed, what shape it was that you missed. And next time when you write it down, you train your eyes to see it. So you definitely want to always write down what it is that what trades you're taking and what it is that you lost on. Was it a pattern there? And these are just some of the advanced trading patterns or trading concepts that you can use if you're trying to get to, adding tools to your toolkit. So with that being said, I'm Mo the Chart Guy, and I'm out.